Hello everybody, what's going on? So few big updates are coming from NIO. Company has just done something that many critics thought was absolutely impossible for a premium luxury electric vehicle company. On June 26, 2026, NIO officially completed deliveries of 10,000 ES9 flagship SUV. Now let that sink in for a moment. This vehicle was officially launched just 30 days ago on May 27th and deliveries began on May 28th. To cross the 10,000 delivery milestone in a single month is impressive for a mass market vehicle, but for an all electric full size luxury executive SUV priced above 500,000 RMB, it is an unprecedented achievement. In fact, this officially sets a brand new record as the fastest selling premium EV in this price bracket to cross 10,000 unit milestone in the entire history of China's automotive market. The 10,000th vehicle was personally handed over by CEO William Li to Mr. Li Ningchuan, a prominent entrepreneur and leader in the energy sector. This isn't just a feel good milestone. It is a massive structural validation of NIO's entire corporate strategy. For years, the primary bearish thesis against NIO was that it spends too much money on research and development, and that its high end vehicles couldn't achieve the volume needed to satisfy those massive infrastructure layout. Today, that entire thesis is being completely dismantled. To understand why the ES9 is moving off the line so rapidly, we have to look closely at the sheer volume of proprietary technology packed into this vehicle. This isn't just a bigger body on an old frame. The ES9 represents the absolute peak of NIO's 11 year of systematic innovation. First, it built on full dominance 900 volt high voltage architecture. This means lightning fast charging speed and incredible powertrain efficiency, pushing out a peak power output of 520 kilowatt and a massive 700 newton meter of torque. Second, the ES9 is running on the world first automotive grade 5 nanometer integrated driving chip, the Senzi NX9031. NIO chose to design its own silicon rather than relying entirely on third-party supplier, allowing for a vertical integration that gives vehicle unmatched computational efficiency for its autonomous driving features. Then there is the chassis technology. The ES9 features the Tianxing intelligent chassis with fully active suspension, also known as the Skyride system, and standard rear wheel steering. Despite being China's largest all electric SUV, measuring over 5.3 meters in length, it achieved a turning radius of 5.4 meters. The customer demand for this specific chassis tech is so intense that higher trim models equipped with Skyride are currently seeing wait time of 16 to 17 weeks. Analysts estimate that NIO has already secured a backlog of 25,000 non-cancelable orders for the ES9 alone. From a financial perspective, this is where the story gets incredibly compelling for NIO stock. The ES9 has a price range between 498,000 RMB to 628,000 RMB. Even if customer opt for battery as a service model, the upfront price remain sustainable. By executing 10,000 deliveries in just 30 days, this signal model has generated billions of RMB in revenue in less than just a month. More importantly, the success of the ES9 and sustained volume of the updated ES8 have pushed new average vehicle selling price well above 450,000 RMB. To put that into perspective, NIO is now commanding a higher average selling price in China than legacy luxury titans like Mercedes and BMW, while moving unit at an accelerating pace. For the balance sheet, this provides a massive lift to vehicle gross margins. High-end flagship SUVs carry the highest margins, as we all know, and the rapid manufacturing ramp-up of the ES9 is expected to act as the primary catalyst driving NIO toward non-GAAP profitability. When a company can pair high margin vehicle deliveries with an expanding scale, the operational leverage kicks in beautifully. But the bullish thesis for NIO stock doesn't stop at the premium flagship tier. What makes the current financial outlook so explosive is NIO multi-brand ecosystem, which is firing on all cylinders. In May 2026, NIO reported total deliveries of 37,700, representing a massive 62.3% increase year over year. In May 2026, NIO reported total deliveries of 37,700 vehicles, representing a massive 62.3% increase year over year. That volume was distributed strategically across three distinct brands to capture the every corner of the market. The premium Neo brand bought in over 20,000 units. The mass market family oriented Onvo delivered over 12,000 units, heavily supported by the launch of Onvo L80 and the refresh L90. Meanwhile, the compact high end Firefly brand added over 5,600 units to the total. Looking closely at the institutional tracker for the June, the moment is moving vertically. Wall Street consensus and Deutsche Bank tracker indicate that NIO is projecting June deliveries to land somewhere between 43,000 to 48,000 units, with a strong mathematical profitability of crossing over 50,000 delivery threshold for the first time in company's history. NIO's order intake is actively outperforming. Major competitors are in the region, including Tesla, localized demand, which has looked incredibly muted as they rely heavily on aging platforms. When we aggregate these factors, the investment thesis for new stock transition from a speculative turnaround story to a fundamentally growth powerhouse. You have a company that had successfully built a high mode premium brand, established a highly efficiency multi-brand ladder to capture mass market volume, and validated its long-term battery swapping infrastructure is an asset. The bear would argue that NIO was burning cash on unproven tech and now facing a company that is setting record breaking delivery speed at a 500,000 RMB price point. As the high margin ES9 deliveries continue to scale throughout the remaining quarter of the year, the impact on the net income will be profound. Institutional capital thrive on structural inflection point, and the 10,000 ES9 delivery is the clearest signal yet that NIO has entered a golden era of monetization. For long term growth investors, the current valuation gap represents a remarkable opportunity because the fundamentals are locked in. The product execution is flawless, and the financial runway points toward a powerful, sustained upward trajectory for the stock. So prepare now. With that said, thank you so much for being here. See you next one.